Bitcoin isn't the problem. The problem is offshore, non-transparent, unregulated, wildcat banks, cross-trading, cross-collateralizing, and conjoining Bitcoin with 10,000 other crypto assets. The bankruptcies have been demonstrative, and that has forced the regulators, both in the CFTC and the SEC and the like, to point out that Bitcoin is a commodity, and that has required millions, if not tens of millions of people to understand the difference or learn the difference between a commodity and a security.
Michael Saylor, the executive chairman and co-founder of MicroStrategy, asserts that Bitcoin's credibility has experienced significant enhancements in the past year, even amidst the backdrop of crypto collapses and bank failures. Michael Saylor says banking crisis is driving Bitcoin adoption. He believes that banking collapse is a political decision. All the big banks will custody Bitcoin. According to a portfolio manager, Bitcoin's remarkable performance during the banking crisis positions the cryptocurrency as a compelling option for investors seeking an anti-dollar liquid play. Amid the banking crisis, the prospect of renewed liquidity easing by the Federal Reserve has gained momentum, indicating a potential weakening of the dollar. Recently, the Fed increased interest rates by 25 basis points and left open the possibility of a pause in June, further shaping expectations in the market. According to Saylor, Bitcoin adoption is being driven by the progressive global loss of confidence in fiat currencies, conventional banking, and competing assets. In regard to Bitcoin's recent surge, Saylor highlighted a notable decrease in impairment losses, indicating positive outcomes. In the first quarter of 2023, the Bitcoin impairment charge amounted to $18.09 million, a significant reduction compared to the $197 million recorded in the previous quarter of last year.
There really is no winning strategy for a regulated bank, because if the short-term Fed funds rate went from 0% to 500 basis points in 12 months, just about anything that's fixed income that you would have bought would have traded down. It's just a question of whether it will be trading down 5% or 15% or 20% over that time frame.
So do you anticipate more banking collapses then?
No, I think it's the politicians that decide whether the banks collapse, and they can choose to have them not collapse by backing them, or they can choose to take into receivership a bank, and then the creditors and the equity holders are wiped out and the depositors aren't. I think that's a political decision. So I think in most places, in the U.S., since the U.S. has the ability to create more dollars, I don't think they'll let depositors get wiped out. I do think they'll let some creditors and equity holders get wiped out from time to make an example of them. In the rest of the world, in Argentina and Turkey's and Lebanon's, etc., if you can't create dollars, then when their banks actually are veering near collapse, they're going to have to go to the U.S. regulators and ask for swap lines and be bailed out by either the IMF or by the Treasury. And if they are bailed out, then they won't collapse. And if they're not bailed out, then they will collapse. And I think you're seeing both of those examples now, and you will see more of them. So the conclusion is, under no circumstances would I have my money in a weak bank or in a bank in a weak country with a weak currency. I think that's basically playing Russian roulette. In the U.S., I would probably have confidence in my deposits, but if I were an investor or creditor to a smaller bank, I wouldn't have confidence in my securities. The regulators are of the opinion that they don't want billions of dollars of U.S. currency to circulate in dark pools in such a way that they evade the controls of the banking system, the KYC, the AML controls. And they don't want to be used for sanctions evasion. And for that reason, stable coins are a problem for them, and I don't think they're going to change their view. I think they've also decided that many, if not most, of the crypto tokens are securities, and they're unregistered securities being manipulated by the issuer in an unethical fashion, and they don't have full disclosure, and therefore they're violating securities laws. And I think their opinion of those two things has strengthened in the past 12 months. I think the meltdown of FTX was a catalytic event that caused the regulators to decide that crypto exchanges, crypto securities, and cryptocurrencies that imitate the dollar are not really consistent with a stable world financial system, and they're going to take actions to shut that down everywhere in the world. I don't think anywhere in the world that's going to be tolerated. I think it's just a matter of time as to how long it'll take for that to be wound down.
According to data monitored by the charting platform TradingView, the dominance rate of the top cryptocurrency has surged from 42% to its highest level in 22 months, reaching nearly 49% since early March. Bitcoin continues to be the standout success story of the year in the market. On Tuesday, the cryptocurrency surpassed the $30,000 mark for the first time since June, showcasing its ongoing upward trajectory and resilience. Saylor's compelling argument for Bitcoin over gold emphasizes that the superiority of Bitcoin is not merely tenfold, 100-fold, or even a millionfold, but rather infinite in its potential. He points out that Bitcoin is much more efficient than gold. According to Saylor, Bitcoin is the most secure network. It's the most secure asset. Everything else has got a black cloud hanging over it.
If we look back to when MicroStrategy began this journey, which was around August of 2020, and we look at the performance of all major asset classes since that time period, Bitcoin's up about 140%. The S&P index is up maybe 25%. The NASDAQ is up in the teens, actually maybe even less. Gold is like a plus 1%. Silver's been down, it's lost money, and bonds have lost even more. So Bitcoin is the best performing asset since then. It is actually showing the promise of an inflation hedge and a store of value. It has achieved that kind of performance in a volatile fashion, but even on a Sharpe ratio basis, it's outperforming alternatives. And I guess the best alternative right now is really the S&P index, which requires that you take equity risk. The world wants a hard commodity money, but the second best commodity is gold, and it's just not standing up to Bitcoin at this point in time. And the weaker commodities like silver, soybeans, oil, timber, they just don't work, because when the price goes up, you can make more of it. And of course, if you can't use a commodity, you got to go to a security. And if you go to a security, you've got counterparty risk, because securities have issuers. And so Bitcoin is filling this void. It's the asset without an issuer. It is not just a commodity, but a scarcity. It's capped. And I think that's why it's outperforming all these other assets over this time period. Bitcoin is the winner. It is the king of all commodities. It is the king of all cryptos. It just keeps getting stronger. And you are free as an investor to agree with me and go long, or disagree with me and short my stock, right? And either of those consequences is fine with us.
The future of Bitcoin remains uncertain, and price predictions have become a popular subject of debate. Some experts predict that Bitcoin could reach $100,000 by the end of 2023. Another prediction is that Bitcoin could experience a sharp decline to around $12,000. The most unbelievable prediction is that Bitcoin could skyrocket to $1 million by the end of 2023. Some experts believe that Bitcoin could stabilize and trade within a narrow range, such as $40,000 to $60,000 by the end of 2023. Another possibility is that Bitcoin could be superseded by another cryptocurrency, causing its price to plummet. What do you think the future holds for Bitcoin in terms of price and value? Will it continue to rise or experience a significant drop? To wrap up our discussion today, we invite you to leave your thoughts in the comments section. If you found this content useful, please show your support by giving it a thumbs up and subscribing to our channel for the latest news and videos. Thanks for joining us.